We came to Onchain 2025 in Bangkok to learn about the intersection of traditional finance, fintech, and Web3, or decentralized finance. We wanted to learn about the tokenization of real-world assets, why they're happening, which ones are going to be tokenized, which ones aren't today but will be tomorrow, and why this is so important, not just for financial inclusion, but for accessibility as well. And we spoke to the people that are working in these markets on a day-to-day basis. Let's see what we can find out.
Before we jump in, let's thank the sponsor of this episode, Dr. Tech. Dr. Tech can help you build your e-commerce store and start selling quickly online and on social media in just a few days. And Dr. Tech stores are gorgeous, modern, and responsive. They are fully customizable and simple to use. Dr. Tech stores have hundreds of included optimizations that will help you sell more online, and a support team that can answer all of your questions. With Dr. Tech, there are no hidden costs, no commissions on sales, no add-ons to buy. Everything is included in one simple subscription. So go to hello.dr.tech/ATP to get a free trial and start building your store. You can find the link in the description below. Also, Dr. Tech is offering a special deal to the listeners of the Asia Tech podcast. After your free trial, you can get your first full month for only $1. To get this deal, simply type ATP into the live chat and they will send you a special promo code. Thanks again to Dr. Tech for sponsoring, and now let's get back to the show.
Hi, my name is Alice, and my company is Nuvei. We are a payment processors, and I am the VP Head of Digital Assets at Nuvei for the whole APAC region.
Perfect. Head of digital assets. So, why should every financial asset be tokenized?
Firstly, it's transparency. So everybody can already see what is listed and the ownership of the properties as well. And the second thing is everybody will have a better investment tools. They have more options for their investment.
So the last thing is, do you think this is a disruptive technology or an enabling technology?
I do think it is actually both. So disruption to the traditional way of people doing investment and traditional finance, but it's also an enabler to the freedom of finance for everybody in the future as well.
That was awesome. Thank you so much, Alice.
Thank you. Thank you.
From someone from emerging countries, we believe that this tokenization is about inclusivity. It's about access of anyone can actually access financial products everywhere, right? Because for some of us in emerging countries, accessing a specific products are not as easy as it looks from, global, or Western countries, right? So we do hope that it will bring a lot of, balance in terms of the distribution of asset. That's something that we do believe.
Okay, you said emerging countries, but tell everybody where you're from.
I'm from Indonesia.
Perfect. So one more thing. Is this technology disruptive or is it enabling?
It's completely enabling for us.
Thank you so much for your time.
I mean, tokenization is really a mechanism. It's a mechanism to take things that are off-chain and to move them on-chain. And tokenization then allows it to be democratized. We put into the DeFi space, into a decentralized financial space to allow for a democratization and for everybody to be able to control their own finances.
So for people that aren't necessarily in the DeFi space, tell them why going on-chain democratizes it for them.
Yeah, so the DeFi space means that nobody's in charge of what you're doing with your own money. You're in charge of what you're doing with your own money, and the tokenization is a mechanism for you to get access to a whole range of other kinds of investment assets or even non-investment assets that you could not possibly get in the regular markets, and for you to do it yourself based on your own research.
Okay, one more thing. Do you consider this disruptive or enabling?
I consider it enabling. I mean, I don't think it's disruptive. I think it's an additional avenue. It's not going to replace everything in the traditional financial world, but it provides a new avenue, a different kind of avenue that enables a whole lot of people who are not so involved to become much more involved in their own finances.
Thank you so much for doing that, Eli.
Of course, anytime.
Why should every asset be tokenized?
I don't think every asset should be tokenized. I think that's although it's a sexy byline, I think there are some assets that could be tokenized. I think there's efficiencies to be had from that. I don't think that as a general rule, every asset should be tokenized.
So can you tell me one asset that definitely should be tokenized and what the efficiencies are that come from it?
I think one of the basic assets that should be tokenized is access to money market funds. I think we can sort of agree on that to a certain extent. The reality of the matter is of course people in sort of more advanced markets, they take that money market fund yield for granted because you and I, we can open up an Interactive Brokers account or any other account. We'll get a money market access to money market account stat. But you don't have. I mean, what we take for granted, you can't get in a lot of emerging markets. And with the sort of decentralization work, you have a lot more people who are actually already gaining access to some of these products. They're not secure. We have no idea what the provenance is. There are issues with illicit flows. There are issues with, capital evasion, capital control evasion. There are issues with tax evasion as well. So I think this is sort of a pivotal moment, a turning point, if you will, an opportunity to sort of do this right.
Thank you so much for doing that. Very interesting stuff.
I think in my perspective, not all financial assets should be tokenized, right? Because I think what is the essential of tokenizations is basically you bring the real world financial assets to Web3 using blockchain and you tokenize it so people can have more access, you fractionalize it and whatnot. And by having this idea, it means that not all asset is actually fit to be tokenized. For instance, probably asset that is actually more sophisticated for institutions and whatnot might take longer time for tokenizations. So the question will be, what is asset that is fit to be tokenized? I feel that is a more fair questions.
So tell me, give me an example of one that's 100% sure to be tokenized.
Corporate bonds. Very simple. Corporate bonds, for instance. Now, corporate can have access to many more investors. If previously their investors only their local family office, their local banks and whatnot, now with tokenization, it opens up with whole new ideas. Say your Web3 crypto bros now can also invest in your corporate bonds.
So tell me, is this disruption or enablement?
Disruption for sure. One thing that most people doesn't notice is tokenization doesn't skip the process. Meaning all the process of like your auditing, your underwriting still need to be done. Because at the end of the day, you talk to institution, this is the proper process. But you do it more efficiently.
Thank you so much for doing this, Marcus. I really appreciate your time.
Thank you.
Today, if I want to send you a message, I can do it right away and you will get my message within a second. But today, if I want to send you money and you are not in the same country as me, we need to wait days or even weeks sometimes. Why is that the case?
So I would ask you, why is that the case? Why do you think it's been set up that way?
Because the way money moves, it's not moving at the same speed of the internet. It's moved on rails that were built 5 decades ago, rails that are too old. So that's why we need to tokenize assets, we need to tokenize money, we need to bring all of this onto the blockchain.
So do you think this is disruptive or enabling?
It is enabling, and I think how it would happen is blockchain will exist side by side with traditional financial systems. The way I see it, this is just like how fintech happened 1 to 2 decades ago, right? Everyone thought fintech would destroy the banks, but that's not the case. Now every fintech is trying to be a bank, every bank is trying to be a fintech, and both are coming together nicely. That's how I see blockchain and traditional financial systems coming together.
Chinan, thank you so much for doing this. I really appreciate your time.
Thank you.
Not every financial asset should be tokenized right now. I think that over time, all financial assets will be on chain, and I think the important part is for adoption to happen that we start with what's relatively straightforward to understand and adopt, and then build momentum from there.
Tell me something that should not be tokenized right now, but that will be tokenized later.
I think illiquid like real estate is so asset specific that the ability to tokenize and then provide some degree of liquidity is going to be quite challenging at present.
Got it. And one more thing. Is this whole process disruptive or is it enabling?
I think you have creative disruption, but it actually enables adoption, right? So both can live together. And I think what you have to think about are the 3 C's. You need compliance, you need custody, and you need composability. If you have all 3, those assets are ready for tokenization.
Okay, that was awesome. Thank you so much for your time today.
Pleasure. Thank you for your time.
I think not necessarily all financial assets, but definitely those financial assets where tokenization could improve liquidity, could reduce costs, could provide transparency and auditability. Those are the kind of assets which could greatly get benefited from tokenization. Examples would be your private credit, illiquid assets. But like say if somebody tries to go and tokenize large cap equities, which already are very efficient, probably may not add that much value.
So you don't think that we're going to tokenize like Apple stock or Microsoft stock? You just don't think that's going to happen?
It may happen, but it doesn't necessarily add any marginally large benefits to the current already efficient markets to start with as a first wave.
For sure, not as a first wave. But let me ask you this. So in the old days, right, trading used to be manual. I would stand in front of you and say, I'll pay you $100 for 400 shares of Microsoft. And you'd be like, well, I don't know, how about 101? Right, we just go back and forth. And then it all went digital. But the reality is that there was no extra benefit except you could trade maybe faster. So I'm just curious, what type of instrument do you think if you could tokenize it tomorrow, you would do, and it's definitely more useful?
I think private credit is one such asset class because by nature, it doesn't have already available consolidated infrastructure for settlements, etc. Tokenization helps it, making it quite fluid in terms of fractionalizing, but in terms of also transfer of ownership or in terms of using that as collateral, which is all very difficult in the current infrastructure around these kind of assets.
It's a great answer. One more thing. Is this technology disruptive or enabling?
I would say this is more of an enabler. Technology itself isn't the solution. Fundamentals of finance still remains the same, but it does help in adding a lot of efficiencies in the existing infrastructure.
Thank you so much for your time. I really appreciate it.
Appreciate it. Thanks a lot.
Why should every financial asset be tokenized? And maybe why should insurance be tokenized?
Tokenization is something that is catching on, right? Of course, tokenization has a lot of benefits, including like cost efficiency, savings. But the issue is with the regulatory compliance. So not every asset is ready now for tokenization. Some are the lower hanging fruits, but there are some that is more difficult to tokenize. So we are seeing things are moving now. Yeah.
So tell me one asset that you think can be easily tokenized, that should be tokenized, and will make it a much better experience.
I would say is tokenize of bank deposit, tokenize of currency like US dollar or whatever local currency, Sing dollar, Hong Kong dollar. So a lot of central banks are moving to this area. So we'll see a lot of development in this area.
Okay. Do you think this idea of tokenization is disruptive or enabling?
I think it's an enabler. Yeah, because with tokenization, you can achieve much more efficiency. And it plays a very important role in the digital asset ecosystem because especially for stablecoin or digital currency, once you tokenize, that is like the base for all kinds of business transactions, right? Because business to business, you need to transfer value. So with tokenization, the value can be transferred easily on-chain, it's transparent, it's immutable.
Thank you so much for your time. I really appreciate it. That was great.
Thank you.
Well, actually, I don't think every financial asset ought to be tokenized, or at least not yet. I think there's a sequencing here whereby we're going to see assets that are perhaps more liquid getting tokenized first, but not necessarily the ones that are working well today. So certain asset classes, debt, equity, which are already in the public markets, probably work fairly well. And so there probably isn't incremental value in the tokenization on day one, right? So I think if you go away from those, but still in a fairly liquid space, maybe something like private credit, that's something that we're looking at, where it's mostly bilateral today. And so there is incremental value, right, in turning that into more of a multilateral format. And so tokenization, I think, lends itself well there. Private credit is, of course, a big umbrella expression. So we would still be thinking at the more liquid end of that. And then over time, you can get down to the more illiquid side of things. I think within that, though, the challenges to face are getting demand, getting access, getting distribution right. Tokenization in of itself is not going to bring liquidity automatically. And I think there's a bit of an assumption that it will. I think people think of tokenization and fractionalization as being an immediate cure. It's not going to work that way. So I think ultimately crypto will become the rails, the infrastructure that most of finance plays on. It's not day one though. It's a sequenced set of steps.
Do you think this is, I said this on stage earlier, right? But do you think this is just a natural transition from you and I standing on the street on Wall Street going, how much are you going to pay me for this? How much are you going to sell me for that? And then moving inside and having it more systematized. And then after that, having it all electronic, where it's like, I don't even know who I'm trading with, but it works. And then moving on to these crypto rails.
Yeah, I think for me, it's all about sales. It's one big exercise in sales lead time, right? In a way, crypto has started with the tech in a build it and they will come kind of approach. That's not quite right. I think institutions, people generally need hand holding through these steps. So I think it's as much about cultural mindset as it is about the technology and the operational mechanics, shall we say, right? And so there will be a point in time where this is the way it works, but there will be a step sequence, and getting that sequence to become shorter is about a sales pitch, which doesn't necessarily talk about the tech first, right? What is it you're trying to solve? Let's talk about that. The tech should be somewhat, second or third part of the conversation.
I'll leave you with this. The analogy I like to make with this is your mom sends emails and has no idea about TCP/IP.
Yeah, look, I mean, I use a similar analogy, which is, half the world's got Apple phones and half the world's got, Samsung or something. And I don't know anyone who ever sat there and debated iOS versus Android. Now, I'm sure there is, but it's less than 1% of the world, right? No one cares, right? Or, so people just want to do their thing quickly, cheaply, efficiently, safely, whatever. And it should just happen in the background. So, yeah, it will become the way of the world. I don't think it's going to be on Monday morning, though. And but making it Tuesday morning, perhaps, right, is about starting off with assets or mechanisms that people understand, right? The stablecoin is a very good example. I think a stablecoin is a mental bridge of what is this thing called crypto. Oh, it's okay, I get it. It's fiat, and it's now in a format that allows for quicker settlement, right? And so we're going past stablecoin now into the second step and the third step on that journey. So it's as I say, it's the cultural mindset, and it's also, for me, this is all about sales pitch. So how do you make it nice and easy for people to understand? It has to be intuitive.
Perfect. Thank you so much for your time. I really appreciate it.
Thank you.
I think it increases access for clients. It does also reduce cost of operating with them. So I think that's why it should be done.
And do you think this is just like a natural progression of where the financial system has been going since kind of its inception to today? It's just natural.
Yeah, I think if you think about it from a first principles perspective, there is value. It's just that it's not obvious right now to regulators, for example, and I think that's what's preventing the adoption. So from our end, we believe that time will come, and we are seeing it happen. So it is a natural progression if you think about it from a first principles perspective.
And one more thing. Do you think this type of activity is disruptive or is it enabling?
I think it's enabling. The way we see it, even as a builder, it gives me access to build things, build new experiences. So it enables more solutions to be out there, the market to be a bit more competitive.
Sonny, thank you so much for doing that.
Thank you.
Wow, what a day and what an event. Onchain 2025 did not disappoint. We actually had the opportunity to learn about the intersection of traditional finance, fintech, and Web3. We spoke to a ton of people. We learned a lot, and we're looking forward to coming back to Onchain 2026. Bye.